I'll just quickly talk on expatiate more on technical indicators. Technical indicators, how to use them. But let's say the fact, technical indicators fails at times. Sometimes, a lot of times, they fails, but at least they give you some assurance. At least they give you some assurance in placing a trade. So these are ENG/BTC. As you can see it here, is ENG/BTC. So in our previous lesson, I've told you that these are how to use MACD. I've explained how to use MACD indicators. You see, if this MACD line, it is MACD Bollinger Band. As for male, Bollinger Band is the most accurate indicator so far. So followed by MACD. This is MACD. What we call MACD is moving average convergence divergence. MACD is moving average convergence divergence. So this is as you can see, this is MACD histogram. I've explained that in my previous video. This yellow line is the signal line, or this red line, it is the MACD line. So when you see this yellow line that is below, that means the market is coming down. As you can see here, as you can see here, that this MACD, this yellow line crosses the red line, so the market is moving upward. So as you see, this upward trend, the upward trend started, so it crosses it back here, so the market is coming down. So you can use this MACD. It is one of the most accurate indicators so far, also after Bollinger Band. And mind me, according to what I've been saying in my previous video, that if you see any in your chosen time frame, most especially if you want to base your trade, don't use smaller time frame. At least start from 4 hours time frame. You can only use 1 hour, this 1 hour, an hour, each one time frame that you are seeing here. This 15 minutes, this 30 minutes, this 30 minutes here. If you click here, you can only use them to analyze what you want to place your trade on 4 hours time frame. Don't use 15 minutes of 1 hour time frame to place a trade, because most especially technical indicators don't work with them. So when you want to place a trade, when you want to analyze market, start from at least H4, which is 4 hours time frame. I think I've explained every an hour how an hour time frame is formed, how 4 hours time frame is formed, how 2 hours time frame is formed. I've explained that in my previous video. So these are 12. This is 12 hours time frame. So as you can see here, as in the previous video that I've discussed, when you see this, any trading you see below, this is the middle line of Bollinger Band, is the bridge between the uptrend. This middle line, it is the bridge between the uptrend and the downtrend. So as you can see, this ENG/BTC in an up, it is in downward trend direction. So as you can see, all this background line that you are seeing, they are also support and resistance. All this background line that you are seeing, all this background line of the chart, they are also support and resistance. So as you can see, this ENG is coming down now, so you aim for this support. It is coming directly to this support, because when you want to draw, you can also draw a trend line, as in the previous lesson that you've touched, that have been taught. When drawing a trend line, at least your trend line must touch two candlestick to where you are marking it. I hope you get it. You see this you can call this background line a support line, because when this is the present background line. This is the present background line I'm talking about. So when you scroll it here, so this background line, it touches the market here. So when you still scroll it back, it touches market like that. So it is also a support. So you aim for this, as this price is it currently, you aim for this 0.003594 support. So the market is coming there. There is a slightly chance, because when you see 24 hours low, this is 24 hours low and 24 hours high. 24 hours high of ENG slash BTC. I just use this as a typical example. The 24 hours high is 422, 0.00422. The 24 hours low is 0.3749. So even this, that means this ENG slash BTC, I'm coming to margin trading. The reason why I've not do anything on margin trading and future trading is that you must know how to do spot trading. You must understand chart very, very well. Though I'll be sending signal, but you must understand chart very, very well. You must understand how to use every futures and spot trading, including stop limit order, market order, limit order. You must know how to use them very, very well before you comes into spot before you comes into leverage and margin trading, because there are substantial risk involved. You have the high capability to make a profit. So also you has a high chance in losing your money. So that's why I've not talked about leveraging and spot trading. But mind me, spot trading, if you really have a good capital, spot trading is the best so far. Leverage trading, margin trading and future trading is just for you to enter market and take your profit and leave the market. You have it also has the disadvantage. The main disadvantage is that the main advantage is that you'll be able to leverage your money. When you are having $10, you can leverage to $100. You can use that $10 as a collateral. When you use 10 times leverage, that means you'll be borrowed $100 to place a trade. So you are only having $10, you'll be borrowed $100 to place. You'll be borrowed additional $90 to place a trade. So you have the ability to leverage your money. I'm still coming to that. I will explain margin trading and future trading in details also. So what I'm trying to do right now here is that as you can see, so this market is coming down. So be aiming for this support. Be aiming for this support level. It will come here. There's a slightly chance that it will come because it has crossed this Bollinger Band. It is coming. There's a slightly chance that it will come here before any further move forward. So if you want to even if you want to place a buy order, you can place your buy order at this 24 hours low, which is 3749, as you can see here. So market comes down there before any further movement. So I want to quickly show a dynamic chart pattern. What engulfing chart pattern. There is a pattern formed by candlestick that we call engulfing pattern. Whenever you see engulfing pattern, it means all the candlestick that will follow. If it is bearish engulfing pattern, the candlestick that will follow, it will be bearish. The market it will be bearish. If it is a bullish engulfing pattern chart that you see, the candlestick that will follow, it will be bullish. The uptrend will continue with that trend. So I'm just but engulfing pattern doesn't applies frequently. It doesn't happen frequently when talking about engulfing chart pattern. Let me use a lower time frame. Maybe I can see a good example of an engulfing chart pattern. Engulfing chart pattern. I want to show you a engulfing chart pattern. Engulfing chart pattern. Engulfing chart pattern. Engulfing candlestick. Engulfing candlestick pattern. Okay. Engulfing candlestick pattern. All the one I'm seeing here, they are not fully engulfed. All the one I'm seeing here, they are not fully engulfed. All the one I'm seeing here, they are not fully engulfed. Okay. That means I will show that. Okay. I will also show you a picture of engulfing chart pattern. I see one there. I see an engulfing pattern here. You see this blue candlestick, this red candlestick, it engulfs, but this is a little engulfment. It engulfs these green candlesticks. The green candlestick, the one I marked in circle here, the one I circled here, this I'm talking about this very little green candlestick, and the red candlestick that is here. You see these red candlesticks, it engulfs this green candlestick upward, That one is very useful in margin trading and leveraging. You can be able to enter market and do what you want to do maybe within 20 minutes and leave. But when you want to trade, the bitter truth is that when you are trading leveraging and future trading, you must have your portfolio. You must have certain amount of coin in your portfolio. Maybe you are having $1,000 in your portfolio. You can just set aside $100 for future trading. So when you are making profit with that, you can be spending that on the profit. But don't future trading is not advisable that you bring all the capital you are having into future trading or margin trading. So because you have the high probability of making profit and you have the high probability of losing money there also. But when you don't over leverage, there's high probability of you making a lot of profit. So these are engulfing chart pattern. You see this red candlestick that I marked here, it engulfs this green candlestick. So the one that will form, the downtrend will continue because it doesn't engulf it very well. I will send an image that you can see there, an engulfing chart pattern. If the market engulfs it very well, it will follow the trend. The trend will, if it is uptrend, that uptrend will continue with the next candlestick that will form. It will give you 100%. It is very accurate when you also see an engulfing chart pattern. And anyways, you see this Bollinger line that is squeezed. When this what we mean by that is that when this three Bollinger band comes together, as you can see, it has comes together as you can hear. They are squeezed. It is squeezed here, so it means breakout will happen. It means breakout will happen. It means breakout. Maybe if it is an uptrend breakout will happen. The market will go uptrend. It will gain, and if it is downtrend, the downtrend will be huge. So as you can see here, the Bollinger band, this three Bollinger band has come together as they have squeezed. They have come together here. So the market breaks down, as you can see here. The trend continue here. So the same thing applicable to uptrend. So you must be very much mindful of that. Bollinger band is one of the most accurate indicator, and if you combine Bollinger band with MACD line, I'm sure they are very accurate. They are very accurate, especially on 4 hours time frame. Anytime you want to base your chart on, all these 15 minutes, all these 1 hour, they are also a time frame chart, but they are used by scalpers. They will do scalpers. We have a strange strategy that we call scalping. They will just enter market and do anything they want to do within 5 minutes and leave. They are used by scalpers to scalp market. They are used by big boys. They will control market. They will put an amount of money inside market, so they can drop market to favor them, so as for them to gain. And they will do anything they want to do within short period of time. They will leave the market. So this is just another trend of and technical indicators, how to read them. All these relative strength index, they are also correct, but at times, most especially, they give false signal, so you can't rely on them. Or you can't rely on maybe a one indicator, so in placing your trade. And fundamentals also affect market. So that's why I pick a coin with both fundamental analysis and technical analysis, because fundamental is what makes the market. Fundamental, what we call fundamental, is news and trend of about the market is what we call fundamental analysis. If technical indicator is good, if all the technical is going uptrend, if any fundamental comes out, fundamental can kill technical analysis at any time. That is just market. So fundamental is solely what makes the market. A bad news may come about Bitcoin. You may see the uptrend that this market is going uptrend according to all what you have forecasted. According to the market is having the good volume, is having everything, but a news can come out. It can be a bad news about Bitcoin. So it will kill that your technical. It will kill technical indicators. So that is why it is very important to combine fundamental. Like when buying a coin, or when you want to hold a coin, or when you want to leverage, you can even leverage a coin according to the news, to the good news that to the upcoming good news that coin is having at that moment. Maybe they are launching something, or they want to embark, or what will make that coin. You can leverage that with this fundamental analysis. You can place a trade with it. You can hold coins with it. Fundamental Fundamental kills technical analysis anytime. Fundamental is what makes the market, but at least you have some assurance, you have a lot of assurance also with technical indicators. So that's just it. So let me quickly, this MACD line. This MACD line is also very important, and this is also volume. You see that the volume is dropping. This volume is dropping early dose, so this market is going up. When you see a coin that let me give you one clue. When you see a coin, all what I'm teaching you also need to put them in practice so that you can be able to know them. Because Binance, we don't have spot trading demo accounts. You can only Binance only has future trading demo accounts. They are not having spot trading demo accounts. So you also need to put them in practice. You also need to study them with your own practical for you to be able to get them. But I reveals all what I'm supposed to reveal. So this is volume. All these bar charts that you are seeing, they are volumes. So when you see a coin that the volume is rising, you see this 22, the volume is reading here. This is 622 BTC 0.17. If that coin is not rising and you see this volume that is increasing, that means that coin will rise. And if a coin doesn't drop and you see the volume that is dropping, that means the coin volume also make markets. That means that coin will drop. Sell what you're having. So you can also add that to your favorite to master market. When any coin that will rise, the volume will first of all increase. So when you see the volume that is rising, you can add it to your favorites. You can be checking it outside if you don't want to use all this histogram. You can add it. You can be master. You can be studying it. When you see the volume of any coin that is rising, maybe within 2 hours now, this 622 BTC volume, 24 hours volume now increased to 800 BTC. Within the next 4 hours, you see 1000 plus BTC. That means this coin, it will spike in price. And if you see a coin that the volume is dropping, so that means that coin will be, you sell what you're having, the coin will drop. So these are just some clue used by a pro crypto trader concerning technical analysis. There's nothing here that I have not explained concerning technical analysis. It is just for you to put them into practice for you to know them. So and you must know how to use stop limit order very well. So everything about trading is you also learn in trading. Even me too, I'm still learning up to date. Every pro crypto they are still learning. Because the trading journey is very far. You will be learning every day. You will learn. Trading is not just to be making profit, but you also learn when you are trading, and it is not to be greedy. When you see profit, if you are doing a day trading, when you have make a profit, exit that market and wait for another entry point and wait for another good entry point. Don't just be greedy. And when you don't want to exit a trade, you place your stop limit order. When you place your stop limit order, you wait. When you place the stop limit order, maybe you buy coin A at $60. So that coin A has increased to $70. You can place your stop limit order as that's your $60 or $61 of your buy price. So that when market is coming down, that's your 60. Because before any confident movement, market doesn't go upward. Market is not something that will be going without any consolidation and retracement. There's what we call consolidation and retracement. Is when market is going, it will retrace. When it retraces, maybe coin A reaches $70, so it can retrace to $62 back or $63 back before it will touch that $70 again. When it touch that $70, it will now leave that $70. The next bus stop can be $75. So when it reaches that $75, there's a high probability that it will retrace to $70 back. So that's how market moves. Market is not something that will be going without any retracement. No, there will be a retracement and correction. It is because of the institution that keeps buying BTC. Every BTC dip since no, under normal circumstance, BTC is supposed to have been retraced back to $20,000, but it is because of the institution that keeps buying it. So when market goes, there will surely be a retracement. I'm very sure of that. Bitcoin right now, presently, Bitcoin is supposed to be around $20,000 to $25,000. It's supposed to come and retest that $20 back. but we don't know yet. We don't know yet. Bitcoin can come anytime. It can retrace to there will be a correction, because when market is moving, no matter how pumping they are pumping the market, there will be a retracement to when it reaches some certain stage. There will be a retracement, and there will be a further consolidation. It will be consolidating. It will not move up, it will not move down, it will be consolidating, before any part for that move. So this just how to, I hope you can get something out of this lesson.